Welcome back. You're still with us on Startup Street. Karthik Reddy of Blume Ventures believes India continues to be a buyer's market unless the seller is a second-hand founder. Adds there is a lot of buzz around early-stage funds, but growth-stage funds continue to be mellow. Further, he goes on to call his bet on Dunzo as a risky game as it needed intense capital. Adds he neither has money or courage to go deep into quick commerce. Here's a slice of that conversation my colleague Shilpa Ranipeta had with Reddy on the sidelines of the IVCA Conclave 2025, where she began by asking him about the outlook for startups in 2025.
I think it continues to be, in my opinion, a buyer's market, other than when the seller is like a second-time founder or a seasoned founder. Okay. People want to buy speed of execution, want to buy speed of team building. Not easy to necessarily get that with a first-time founder. They have to go through the motions, right? So we're seeing a lot of buzz when a second-time founder shows up. When it comes to new areas, I think there's a lot of buzz around AI. There's a lot of success stories now coming around D2C brands. So people are excited about, hey, what's the next success story in this space? Is it in beauty? Is it in food? Is it in cosmetics? So we're beginning to see those trend lines form, and therefore a lot of activity in the early stage space.
Right.
First, there's like 10 times more micro VCs than there were 8-9 years ago. So they have to invest somewhere. And then there's a lot of choice now for the slightly later stage VCs, like us or the Series A or Series B folks. So definitely, and there's a lot of dry powder left for funds which are focused on India. The biggest challenge will be when you get to growth, do you have metrics to be able to show that you can be profitable, a path to public, how quickly, and how much of a multiple there is left yet, right? If it's overpriced, then people are very cautious. So growth continues to be very mellow, in my opinion, very guarded in that sense. Everyone's still working their portfolios to go public, and that means you can have a lot of frenzy in early stage, which is happening. I think it's coming back slowly, but you have to be very cautious about what you present to a Series B investor.
So what about 25-30 tech IPOs are predicted? What about your portfolio? Are you also, how many of your companies are, proactively going that way?
So in the next 3 years, we have a roster of 15 probables.
Okay.
If I get 8 to 10 of them, I'll be delighted. Pass the line.
That's 3 years.
3 years. Now, if you ask me in 3 quarters, I have none.
Okay.
So it takes time. So the biggest learning in India has been, like, unlike the US, you can't hit the button, go to SEC, file an S1 and just go public. A lot of back work.
Correct.
A lot of prep in terms of like splits, bonus shares, rationalizing the cap table, one last cleanup of anybody who wants to exit because you get locked in, appointing bankers, lawyers, being SEBI compliant, public market compliant is not as trivial.
Correct.
So the work has started. I would like to believe that in a year we have a shot of 3 to 4 within the portfolio.
Within the portfolio.
But it'll be closer to like 12, 15 months from now, not 6 months from now.
What is your sense on, what direction this quick commerce space will take going forward in 2025? How do you see that evolving? Because we're seeing a lot of vertical players also coming in over here. So what is your sense in what direction do you see that going? And is that a space that you believe in for this year?
We were one of the OG believers, right? We are Dunzo's backers.
Dunzo.
Yeah, so it didn't end well tragically, but basically we gave it a fair shot. It was a capital guzzling game. We lost out on that. It's a capital guzzling game.
Right.
I don't think you can build that to profitability very quickly.
Right,
if you look at Zepto, $1 billion raised recently, talking of $1 billion in the public markets, and then saying we can get there.
Yeah.
It's like $2 billion. Like, we've never seen those kind of valuations in our portfolio, right? And that's the amount of capital raised here. So these are, asking an early stage investor how these games are played is beyond our scope.
Right.
We watch it from the sidelines because some of them are our companies, but difficult to know how you predictably, they can grow from my perspective.
Fair enough.
Yeah, if the large growth investors don't buy into it, they're bound to have trouble.
We have more coming in from the IVCA Conclave. Siddarth of 314 Capital claims coup, an Indian version of Twitter, was one of the casualties of the funding winter. Adds that coup was a right idea, but at the wrong time. He recalls the failed M&A attempt and lesson he drew from this failed venture. He said that he told my colleague Rachna Dhanrajani, other than coup, he also spoke about valuations of startups and the evolution of Gen AI. Take a look.
The valuations are mismatched between supply and demand. I think we have a lot more demand for these kind of companies than the current supply that's being offered by the private market as of now. I think what we are going to see is as more companies end up actually IPOing, which is going to be, it's not a possibility, it's an inevitability. I think at that point in time, these valuation mismatches will end up actually getting normalized. Because when the market has a wide range of companies to end up actually picking and choosing from, then market forces will end up actually driving valuations. I think what we've seen as of now is because there were so few startups, at one point in time, the only bet on the consumer internet economy was Zomato. Now we finally have a Swiggy to end up actually competing with that. So we need these market forces to end up actually increasing the amount of supply that we have. Once that happens, valuations will also end up actually getting right-sized.
If chatter that went around about 6-7 months back when Coup shut down, and you were one of the investors in Coup, what are your thoughts on that? What were the lessons that were learned from that?
I think Coup was a right idea at the wrong time. They got slammed within the funding winter that just actually came up. And the business model of Coup also required a lot more capital support for them to build up a user base before they could end up actually starting off with monetization. So I think it was unfortunate timing that ended up happening there. It was still a phenomenal product. It had fantastic inroads when it came to Latin America, when it came to parts of Africa, as well as India, for that matter itself. But I think just because the macro ended up actually turning at that point in time, it was unfortunate. There was an M&A opportunity that didn't fructify at the very last minute for reasons.
What are the lessons that you take from here as an investor?
I think from an investor, I think the one thing we've actually taken away from this is don't let one failure end up actually coloring the optimism that you have. I think of an investor, especially VC, can't be safe. You can't end up actually betting on the same companies that everyone else is actually doing. You need to actually cut across the grain. There are times it works out. We had phenomenal success when it has. Times when it doesn't work out, there will be failures. But I think as far as we are actually concerned, if we do find another opportunity like Coup in any other area, what happened with Coup is not going to stop us from actually funding that and supporting it the way T14 supports all the startups.
What are your thoughts on India catching up on this Gen AI bandwagon?
I think, Gen AI, the way I end up actually looking at Gen AI is, after a while, I think the commodification of Gen AI is going to end up happening. A large amount of what's going to set one Gen AI model against the other is the training data it ends up actually running on, number two. And number three, what are the business use cases you can actually do? Now, everyone uses ChatGPT, DeepSeek, Claude, etc. for more or less similar reasons. We get to end up actually seeing companies build strong use cases around that. For example, the legal fraternity has seen some amount of success in using these LLMs for basic drafting, etc. So I think implementation of these models is going to be a key, sector to end up looking at. We're still looking for companies who can end up better implement this, but I think for that we need access to strong quality data. I think that's actually a phenomenon, that's actually of utmost importance. We're still waiting for the DPDP rules to get enacted and for us to get regulatory clarity, because the last thing anyone wants is to end up actually training these models, realize that there's some fault with the data and everything collapses. So I think until we see regulatory clarity emerge on those particular areas, we won't end up seeing large amount of funding happening.
For more news and updates, all you need to do is follow CNBC TV18 on all of our digital platforms.